Hi, today we are going to do an analysis of Tamilnad Mercantile Bank, how big it is, how is it doing financially. We're going to look at its financial data over the past few years. We are going to see its new initiatives that's going for and future plans. So let's start the analysis. But before we just start the analysis, I am not SEBI registered, so this is not financial advice. So let's start. Let's start. Okay. All right. First, Tamilnad Mercantile Bank. As the name suggests, it's a bank. Super analysis right there. It's a bank. It takes deposits. It lends out money. It's an Indian bank, so it operates entirely in India. It currently has a market cap of 7,214 crore rupees. Current price of one share is 456. As you can see, its book value is 569 rupees. So it's trading at a discount to book value. Dividend yield of 2.4%. Very nice return on equity of 14% and return on capital employed of 7.49%. So, as the name suggests, Tamil Nadu Mercantile Bank, Tamil Nadu, its operations are mainly in Tamil Nadu. Let's take a look at some of its financials. Before we do that, this is from screener.com. The screen you're seeing all the data. And from screener, we can see a few other things. Yes. Let me shift this to here. All right, sorry. Yes. This is the return on equity. If you're wondering what's that. So return on equity is a fraction. On the numerator, we have profit after tax, and it's divided by equity. That is total assets minus total liabilities. You can see here return on equity 14%, 15%, not exactly 15%. They round it up. So if it's like 14.6, 14.7%, they will take it as 15%. But still, it's only the last 5 years. That's also important to look at. Not 10 years data, but 5 years. So last 5 years, very consistent 14% to maybe reaching 15% return on equity, which is very nice. On screener, we can also see, oh, sorry, we can't see return on capital employed. If we know return on capital employed, 7.4%, that is also really, really nice. Really nice. Let's take a look at some of its financials. Okay, yes. So let's make myself a bit smaller and let's zoom in. Yeah, yes. So in 2025, deposits of 53,000 crores, 53,689 crores in deposits. It's an 8% year on year growth compared to 2024. And we can see it's not the most fast growing, it's not the fastest growing bank. 3% growth last year in deposits, it's not that good. 6%, 9% growth. So it's in that 7 to 8% growth rate, talking about deposit growth. Moving on, we can see advances 44,366 crore rupees in advances. Advances mostly refers to loans. This is a faster growth rate, so its advances are growing faster than deposits, which is nice to see. Again, it's not the fastest growing bank, and that's we should keep that in mind. It's not a fast grower, though it is trying to change that up a bit. Moving forward, all right, what is this? Yes. So it's a pan-India bank. Now it says here pan-India branch network. It's mostly Tamil Nadu. So we can see, let me zoom in. Number of branches. Total, in total, 578 branches, pan-India, but it's mostly Tamil Nadu. We can see 425 branches in Tamil Nadu, then 29 in Andhra Pradesh, 25 branch, 20, sorry, 23 branches in Maharashtra, 22 in Gujarat, 22 in Karnataka, 21 in Kerala, dominated by Tamil Nadu and dominated even more by South India in general. We can see ATMs 1150, 959, out of those 1150, 959 were in ATM. Sorry, were in Tamil Nadu. Moving on, we can read this. Yes. During quarter four 2025, six new branches were opened, and during fiscal year 2024-2025, 26 new branches were opened. So again, we see extremely dominated by one and only Tamil Nadu. It's dominated by Tamil Nadu. Moving on, we can see this. Yes. So what is this? This is book value per share and earnings per share. Right? Are these diluted or not? It's not confirmed. We can just see this. So let me come down here. Let me zoom out a bit. Yes. So book value per share, fiscal year 2025, 568. We saw this earlier. We can see it's been growing pretty well. More than 10% year on year growth in book value. More than 10% year on year growth in book value. Earnings per share also growing really well. 74.68 rupees. It's growing compared to the stock price around, which is around like 400 and something, 450. 74 earnings per share is a pretty nice thing. Moving on. Now, this is important. It's important. All right. Let me zoom in. Net profit. Net profit, we see 1,183 crores. Again, growing very well. Okay, not growing very well, but growing consistently, the consistent growth rate. Operating profit is also growing. Net interest income also growing. Net interest income is a very important measure talking about banks. So it adds to, of course, overall profits. Moving down, we have gross NPAs. If you don't know what's an NPA, it's a non-performing asset. So banks give out loans, and those loans are kind of its assets. That's how it earns money. And NPAs, non-performing assets, are loans which the people who have taken loans cannot repay them. So non-performing loans, exactly, people who can't pay the loans, loans which can't be get paid back. So gross NPAs are declining currently about 1.25%. Net NPAs, net NPAs is basically whatever gross total non-performing assets are there, banks will provide provisions. They'll provide money to cover those losses. So total gross NPAs minus whatever provisions the bank has provided, we get net NPAs, so remaining after those provisions. Net NPAs reaching to 0.36%, very healthy, very nice. We have now PCR, provision coverage ratio. Now, this is without technical write-off. With technical write-off, it would be even higher. But as you can see, 71%, it's up to standard. It's really much up to standard. Moving on. Now, to see the security of a bank, we see the gross NPAs, we see the net NPAs. We saw that its provision coverage of around 70% without technical write-off. With technical write-off, it's even higher. So it is adequate. Here we can see it's CRAR, capital adequacy ratio. Now the blue ones, the blue dots represents CET1. CET1 is the highest tier of capital which it can use to cover, let's say, bank runs. Let's say people are coming and they're taking out the deposits in a hurry. So to cover all those deposits, the bank keeps some money aside. So you can see the capital adequacy ratio, of which CET1 is a very important part. CET1 refers to Tier 1 capital. the highest tier, the most quality capital. That is, it keeps aside for situations like bank runs. So a CET1 of 31% is amazing. It's way more than the requirement. CRAR of 32%, capital adequacy ratio of 32.71%, very healthy. So it seems that on the credit of banks, the credit health of the banks, the balance sheet health of the bank is doing very well. Return on assets, the return on assets of 1.88%, zoom a bit, 1.88%. It's on the higher side. It seems to be increasing post-COVID. That is very nice. Moving on, return on equity, we already saw this, but yep, 13.97, 14.44, 16.78. A bit on the lower side, but still 40% return on equity is not bad, even in the slightest. Moving on, we have a few more stats to look at. We have credit cost, we have cost of funds, we have cost to income ratio. Credit cost declining, reaching to a very, very small 0.41%. Cost of funds on the higher side, 5.93, nothing too crazy. Cost to income ratio, a very nice 44%. And then last but not least, we have cost of deposits reaching around 5.91% in fiscal year 2025. So overall, what we have seen, gross NPAs declining, net NPAs declining, costs are pretty stable or declining. Moving on, yield on advances. Yield on advances, 10.22%, way on the higher side. Yield on funds, I believe yield on funds will be investments, investments that it has made, and that money has returned 9.36%. Very nice. Advances, I believe, is the more important number. And finally, we have net interest margin, a very important metric for bank, around 4%, a bit on the lower side, but still 4% NIM or net interest margin is very, very nice, to be honest. It's a really, really nice number. So overall financials, right? If we have seen at the overall financials, what are we seeing? We are seeing a bank uh, pretty much dominated by Tamil Nadu. Its main operations, majority of its operations are in Tamil Nadu. Its NIM, net interest margin, 4%, rising profits, rising advances, rising deposits, trading under book value right now. Book value is basically equity, total assets, my total liabilities. So the book value is the equity. So its current market cap is less than its book value. We have seen its net interest income rising. Its NPAs, non-performing assets, are declining. Its CET1, Tier 1 capital, capital adequacy ratio, provision coverage ratio, all these things are very nice. If you don't know what these terms are, these are just metrics to see some metrics, some basic metrics to see if a bank is financially healthy. And on that basis, it seems that Tamil Nadu Mercantile Bank is its CET1 is amazing, CRAR amazing, way above the minimum requirements set by the RBI. So on the financial side, it's not a fast grower. That's the thing to keep in mind. This is not a very fast growing. So moving on, we saw the financials. Then let's see its initiatives. What is it trying to do? What are its new plans? Know a bit about the future of the. So these are some of its new initiatives. Hmm. Okay, this is a bit bad. All right, first, so yeah, transaction banking group focusing on NRI business, elite service group. What else? Digital banking revamp, DBR. All right. So digital banking, investing more in IT infrastructure and all that. To be honest, I don't know much about these things. Uh, and that's a bit rough. Okay, so let's see. Transaction banking growth focused on current accounts. Now, current accounts, there's a ratio known as CASA, current accounts, saving accounts ratio. What percentage of its total things, what percentage of its total deposits are current accounts and saving accounts? This is an important ratio because it has to pay really low interest on these accounts. On these deposits, the bank has to pay a very low interest. So higher percentage means that it will, what do we say, a high percentage of current accounts and saving accounts means it has to pay less on its de- interest, basically. Now, yeah, now here we can see is its deposits portfolio. It's a deposit portfolio, retail term deposits. So term deposits are these, bulk term deposits and CASA. So 26% are current accounts and saving accounts. Now, retail is you and I, we are retail customers, common people like us, bulk term deposits, major massive deposits. And these are term deposits. So, like as we see, term deposits meaning these deposits cannot be withdrawn before a particular term, like fixed deposits, and we have recurring deposits. So there's a time limit before which you cannot actually withdraw these funds. So 60% retail term deposits, 40% term deposits, bulk massive amounts. And we have current accounts and saving accounts represent 26%. 26% is really nice. Like genuinely speaking, it seems like a really nice number. Moving on. So it's okay. Moving on, we have this. It's advances portfolio. It's giving loans where? So 42% of its loans, it's going to agriculture. 42% of its advances are going to the agriculture sector. 30% is going to MSME, which is micro and small enterprises, micro and small enterprises, so businesses. So 42% to agriculture for agriculture, 30% to small other businesses, 21% to retail, and 7% is others. Retail loans, you and I, of course, I believe it's for personal, but I'm not sure. But that's how it actually has divided its loans. 30% small businesses, then 42% agricultural loans or loans in agricultural sector. So 20% retail. I believe this should include personal loans and all that. Retail for you and I, we common people, and 7% loans are for others. Moving on, this is pretty nice. These are some of its other new initiatives. Asset business. So this has already been launched, pilot launch at Hu Thukudi region. I'm sorry if that's wrong. Thukudi region, Thukudi region in 2025, expanding to 12 regions in the quarter one of fiscal 2026. If you're wondering what this is, credit management system. So from all I've seen, this means they are just developing one central system, including which will include software and various new methods, basically to make the entire loan process way more efficient, easy, faster for the bank itself. So credit management system is like a central system where the entire loan process is made way more easier, like taking loans, loans taken digitally, allowing people to take loans digitally, making the process faster, loan processing faster, all that just way easier, more efficient. So credit management center and this omni channel platform is just for it to increase its efficiency. The bank is now more focused on increasing growth, increasing efficiency. It's not the fastest grower financially. It seems to be doing well except for pure growth. So, last but not least, let's take a look at future growth. What is the future growth looking at? Sorry, NDTV profit. Okay, let me zoom out a bit. Yes, let me make myself a bit smaller. So, these are some of the things it's actually planning to do. It the bank The bank aims to open around 50 new branches in fiscal year 2026. So earlier we saw it had around 500 something branches, majority in Tamil Nadu, but it's planning to open 50 new branches. It's planning a substantial increase in IT capital in expenditure for modernization, including revamping internet banking, which seems, yeah, that's a good thing. Modernizing, making yourself more efficient, and of course, internet banking, loan origination systems, loan management systems, technical stuff. Modernizing operations, obviously a plus. Now, Mr. Nair, see Nair, Mr. Nair, I believe, is the CEO, the Chief Executive Officer, Tamilnad Mercantile Bank. Now, he anticipates a 10 to 12% profit growth. Cost to income ratio kept below 50%. Okay, cost to income ratio below 50%. Deposit growth in fiscal 2025, we already saw this. So for future growth, yes, they're anticipating 10 to 12% future growth. And in fiscal year 2026, they are aiming for 13 to 14% deposit growth, 13 to 14% deposit growth, which is way higher than previous years. And planning to maintain net interest margin in the 3.8 to 3.9% range. So earlier we saw that its growth numbers in deposits and all that were not that good, and not saying bad, but not the fastest grower. So it's aiming to grow even faster grow even faster than before. So overall, overall, in a summary, what have we actually seen about Tamilnad Mercantile Bank? Balance sheet wise, credit health wise, it seems to be really, really good. It has not grown the fastest, but management is trying to make it grow even faster. It's expanding to other regions. We previously did see that was dominated really much by Tamil Nadu and still is, but it's trying to expand to other places in Tamil Nadu. We saw these uh, credit management centers too. So it's investing more and more in modernization, making a central system to handle loans better, and trying to become more internally more and more efficient. Yeah, its gross NPAs are declining, net NPAs are declining, and the only thing left, of course, you have seen this, but let's take a look at it. Okay, transaction banking group TBG. Okay, higher customer satisfaction, efficient use of resources, increasing digital channel penetration. We saw this earlier. More investments in infrastructure technology, focusing on current accounts. Again, current accounts, high percentage of current accounts as deposit means lesser interest given to deposits. Then, global NRI business. So to tap into India's remittance market and convert into deposits in our area operations. So they are now targeting remittances. So they are trying to increase their market share in the NRI business segment, which is really nice. Nice. So they seem to be moving into new market, not a new market, but trying to increase the market share. So this, if successful, will just lead to more growth. Then elite service growth. Okay. Targeting high net worth customers. All right. Ramping up product per customer. Very nice, targeting higher, richer customers, which is always good. And again, digital banking revamp. This is always a good thing. Modernization, keeping up with the modern world. And this will, of course, improve efficiencies because loan origination and all that will be better. So overall, 50,000 in deposits, 40,000 in loans this year. Yeah, that's it. So it seems to be a pretty good bank. Again, this is not financial advice. So yeah, do tell what you think about Tamilnad Mercantile Bank. As a bank, have you had any experiences with the bank? So do tell in the comments. Have a nice day.